ICT Silver Bullet Strategy for Forex is one of the most misunderstood yet easy concepts in all of trading. And in this video, I'm going to simplify it for you. And this was my personal trading strategy, which I spent thousands of hours studying, backtesting, and using in live price action. And trust me, bro, this does work. This model works. And yeah, let's get straight into the video. So for London, and this is key, so make sure you write this down. London Silver Bullet is 3 a.m. New York time till 5 a.m. New York time. It's not 3 till 4, it's 3 till 5 a.m. That's exactly what ICT says. Trust me, it's 3 till 5 a.m. It's not 3 till 4, it's 3 till 5 a.m. So you've got 2 hours. It's a 2-hour Silver Bullet for Forex. And this is what no one tells you about in London. It's a 2-hour window you've got, because a lot of the good setups will happen between 4 till 5 a.m. So don't limit yourself to 3 till 4 a.m. It's 3 till 5 a.m. So what even is the Silver Bullet? The Silver Bullet literally is just you enter on a fair value gap and you target the most obvious high or low. That's all it is. That's all a Silver Bullet strategy is. And yeah, so what you want is you want a fair value gap to enter on. And this is key. The fair value gap can form before 3 a.m. Right? It can form before 3 a.m. It doesn't have to be 3 a.m. In this example it is, but let's say this was like 2:30 a.m. That would be fine. You just want to enter on a fair value gap between 3 till 5 a.m. That's what the Silver Bullet is. And then you want to target the most obvious high or low. Most obvious drawn liquidity. That's what ICT calls it. And to do this, you don't even need the higher time frame. All you really need is the 15-minute chart, right? And then the hourly chart. So let's get the hourly chart up. You don't need to go above that. You don't need the 4-hour chart. You don't need the daily. You don't even need the weekly. And when you're on the hourly chart, you want to prioritize the most recent price action. Because remember, you're trading the Silver Bullet. And if we look at the hourly chart, we've had a large displacement upwards, evidenced by this fair value gap. When price leaves a fair value gap, that shows that smart money wants to move price up. And then we've had a retracement here into this order block, into this fair value gap, and price is shut off. Right? So that's the narrative that we've got. So if we go down onto the 15-minute chart, so we're on the 15-minute chart here, right? We know we're bullish. What's the most obvious high that we're going to go for? This is the candlestick that we're on. If you're on the charts at this point, where's the most obvious high or low that we're going to go for? Right? It's going to be this high. Now, why is it going to be this high? We just looked at the hourly, and if you look at the 15-minute chart, clearly we're bullish. We've swept liquidity. See all these lows here? We've swept it, and now we've started to have a bullish move up, and we've had a retracement, and now we're in the prime time of London. So now we're on the 5-minute chart. We're on the 5-minute chart, and we're looking for any bullish fair value gap, fair value gap to enter on. And someone was asking me in the comments, let's say there was 2 fair value gaps. We've got one here. Let's say there was another one here. You always want to enter at the lowest one when you're bullish. Always enter at the lowest fair value gap. But fortunately here, there's only one fair value gap. It's just this one here. This big fair value gap here. This is your entry. So where should you enter on the fair value gap? I would say always enter at the high when you're bullish. Unless it's a massive candle. If it's a massive candle, then take the midpoint. Because you'll often get the midpoint. But we're going to assume that we go on the highest point here. So the easiest entry, because we want to get in. Because the thing is with the Silver Bullet, is price will move fast. It will move fast because it's not got much time to work with. So always take the easiest entry. And for your stop loss, it has to be at the low of this candle here, this red candle here, because it forms the fair value gap. So it should be at the low of the candle that forms the fair value gap. Remember, you've got 3 candles that make a fair value gap. And then because this is the bullish fair value gap, you want your stop at the low of the bullish fair value gap, like that. And now for your take profit, the fun part, you should always aim for at least a 2-to-1, I'd say. So let's zoom out a bit. You should always aim for a 2-to-1. You could target these highs up here. That's a bit risky, especially for London, because what you'll find with London, this is how London behaves, is that you'll get a bullish move up like this. So we've had our retracement. You'll get a bullish move up. We'll retrace down. We might even sweep the low of London during New York and then continue. And then we'll finally take this high out here. So you don't want to have your take profit all the way up here just to see this happen. Like, you to be like, plus 2R. Then for it to retrace against you, stop you out, and then go in your direction. So for London, I would always say just aim for a 2-to-1. Just aim for a nice and easy 2-to-1. Like that. It's about 12 pips on euro, which is pretty decent. And yeah, you literally just enter at the fair value gap. It's that simple. So let's play price action. Let's see what happens. Look at that. Boom. There you go. Look at that. Nice and easy take profit. So we've entered at 3:30, around 3:30 AM. That's the prime. And then we hit our take profit at about 5:30. Now, do you remember how I said that the Silver Bullet for London is 3 till 5 AM for Forex? For indices, it's only 3 till 4 AM. But for Forex, it's 3 till 5 AM. What that means is, let's say you missed this entry here. Let's say you missed this entry here. there's a second fair value gap right here that you can enter on, like that. So what would your entry be? You enter at the high of the fair value gap, your stop has to be at the low of this candle here that forms it, and then you'd have to aim for a 2 to 1. So again, look at that, again, you do get a setup. So this is why I say for Forex, there are good moves between 3 till 5 a.m. I mean, just look at this, right? 3 a.m. is like from here, and then 5 a.m. is like up to here. This whole bullish movement, the whole move of London will happen between 3 till 5 a.m. That's the whole meat of the move that you want to capture. 2 a.m. till 3 a.m. is often a Judas swing. You see this? It's often a fake move to take out liquidity. That's what 2 till 3 a.m. is. So you don't really want to be trading between then. Right? I would always trade between 3 till 5 a.m. and that's the silver bullet. So there's your second entry. Your second entry for Forex. That's one of the good things about London is you often get, a second entry, a second retracement. So that right there could have been your second entry. And yeah, nice and easy setups in London. Bread and butter setups, and I'll go give you a bearish example. Now we're on EURJPY, and this is a great example. So we were going for this high here. See this high right here? Lots of liquidity here for the silver bullet. This was the most obvious draw on liquidity at around 3 till 5 a.m. And if you notice, we took out this key liquidity pool that price was going for very quickly. This is the 305 candle. Now we have a fair value gap, but this isn't the silver bullet. This isn't the entry. Now why is it not the entry? Because we've taken out the liquidity. We've already taken out the key target. And if we've taken out the key target, we're not going to keep entering bullish, right? And what often happens is when the key high for the session is taken out, we always have a reversal. We always get reversal. That's what price does. It takes out liquidity and then dumps the other direction. So you don't want to enter on this bullish fair value gap. You don't want to enter on that fair value gap. It's not valid because the high has been taken out. And what you do want to do is you want to enter on the reversal. And how do you know it's a reversal? This is key. How do you know it's a reversal? Is you wait for a bearish fair value gap to form. You wait for a bearish fair value gap to form. And what do we have here? Let's remove this high. What do we have here? A big bearish fair value gap. This huge imbalance here. So we know we're bearish. Look at this. There's been no respect to this order block. We're likely to take out this low, and maybe even this low. So what are we going to do? We're going to enter on this fair value gap for a short. Now, because it's a big fair value gap, what I would do is I'd get the Fibonacci, and I would just enter at the midpoint. Right, just entering at the midpoint. It just gives you a better risk to reward. And if you miss your trade, you miss the trade. But you don't want a huge stop loss. And then you'd put your stop at the high of the candle that forms the fair value gap. And then what you're going to do, you're going to aim for 2 to 1, let's say. Like that. Nice and easy 2 to 1. And then let's just put that there. And let's play price action. Look at that. Boom. Straight to your target. Straight to your target. We've taken out the key high. We took out this key high and then price dumps. This is what price action always does. Always does. Takes out the key high and then dumps the other direction. And this right here, this bearish fair value gap right here, that was your silver bullet. That's your bearish silver bullet. And it's at 4:10 a.m. Right, it's not just between 3 till 4 a.m. 3 till 5 a.m. It's the golden zone for Forex. And then 7 till 9 a.m. for Forex for New York. But for London, we're only talking about London, 3 till 5 a.m. is the golden zone. And yeah, that is how you find high probability silver bullet setups for Forex during London. And you don't hear many people talking about London because they don't really understand it. But I cut my teeth. I cut my teeth on this session. Like I spent thousands of hours trading this, and now I'm a swing trader just because it just fits my lifestyle more because I want more freedom. But I spent so long just staring at these candlesticks between 3 till 5 a.m. and this is what price action always does. Always does. And yeah, if you like this video, if you found it helpful, please like, subscribe, leave a comment because I post every day. And yeah, I'll see you guys in the next video. Peace.